Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit, and my name is Mathew. This show gets you answers to all of your stock-related questions, and to that end, if you've got those for us, you can send them on any one of our social media platforms or that number that you see at the bottom of your screen. That is the number that I have on my laptop in front of me as well, and I will speak to you directly. For now, let's turn to the equity markets and see what's happening. It's a decent day, or it has been broadly. There's still quite a bit of chop and churn. Remember, this is the weekly expiry also to account for, so it's par for the course, that volatility that you're seeing and that chop and churn that you're seeing. The broader market's actually looking quite sanguine at this point, or rather better than the benchmark index. In fact, gaining about 0.5%, the mid-cap index, and up about 0.4% for the small-cap index. Broadly, I would think that the market breadth is in favor of the advances. Among the key indices that are moving today, let's take a look at the sectoral movers. And in fact, the IT index is doing reasonably well. Actually, that last graphic point was interesting because over the last, say, 15 minutes or so, you've probably seen a shift in the advance decline ratio, still tilted in favor of the advances, but less so than earlier on in the session. Among the sectors, as I was pointing out, realty continues to be a gainer in trade, up about 2% or thereabouts, and you have IT as a pack that is doing reasonably well. Media is losing ground, and so is FMCG. The banking index is not doing too much. It's just about flat in trade right now. There is a pack of companies that has been in the news. I don't think that it's moving very much, and I'm talking about the life insurance space. So let's pull up some of those names. HDFC Life, as well as SBI Life, Max Life, the Life Insurance Corporation of India, completely flat right now. Let's pull up HDFC Life. It's up about 4%. Now, the news here is that there was a master circular that was issued by the insurance regulator last night, and we're still trying to parse the details. A lot of these details will emerge over the course of today, and the fine print is actually going to throw up a lot more. But directionally, one of the biggest announcements has to do with the special surrender value. And what that means is, if you are a buyer of an insurance product, of a life insurance product, and I'm talking about your money back policies or your traditional policies, which account for a bulk of the insurance products that are sold in the life insurance space. If you find that you can't pay the premium during the course of that policy, and if you decide that you want to return it, as things stand right now, the amount that you get as a surrender value, that is what is returned to you for what you've paid so far, is not very large. And in fact, it's so small that it's almost like a penalty to you as a policy holder, and it is something that has benefited the insurance industry for a large number of years. What is being suggested directionally is that the surrender value will go up from this point, and as a result of which the incidence of mis-selling should come down. How that will play out is something that we will have to discuss. And by the way, we will be speaking about this in more detail at 12 p.m. But from the perspective of you, the policy holder. For now, let's talk about the insurance companies. And I'm joined by Brijesh Singh, the Senior Technical Analyst at Opulent Investment Advisor Private Limited, as well as Shahina Mukaddam, who is an independent fundamental advisor. I believe that China is joining in some time. All right, so we only have Brijesh right now. Brijesh, thanks so much for taking the time, and pleasure having you on the program as always. Why don't we talk about a couple of about the moves that you're currently seeing in the market? Chop and churn continues today. What are the key levels that you're looking at for the benchmark index, and where are you seeing strength?
So good morning, Alex. Thanks for calling me on your show. So if we look out the Nifty still has been consolidating in the range. The range, if I talk about, is 23,000 or say 23,100 on the downside, followed by 23,450 or say 23,500 mark on the higher side. Still, it's better. It's been consolidated near this resistance zone rather than toward the support zone. So any closing above 23,450 would be a good point for the market to move towards the level of 23,800 or 23,900 we can see in coming days. Regarding the bank Nifty has been considered same pattern formation has been there as a Nifty has been doing. Downside, if we talk about 49,400, 49,500 is a support band, followed by 50,200 to 50,250 on a a higher side of the resistance band. So it's been consolidating in the range, and same thing what we have been looking in the Nifty chart as well as in the Bank Nifty, they are consolidating towards the resistance part. So if any closing above 50,250, Bank Nifty, we can see a high of say 50,800 to 50,900 in a couple of week time frame. So both indices are positive, but they are trading near the resistance zones. Still on the hourly chart as well as on the daily chart, there are nothing negative part or a weakness not been found out.
Okay, fair point. While we wait for Shaina to join us, why don't we take a few shorter term queries, and several of them already coming through. The first one that I'm taking is from Anbu. Anbu is writing in from Chennai, asking about Marico and asking for a short-term perspective on this. Brijesh, how does it look on the charts? Would you suggest a fresh entry at this point? And what are the targets and key levels to watch for Marico?
So, Alex, if we talk about the shorter term, that means I'm assuming for a couple of month time frame. Now, we look out the Marico chart. We have seen the stock from 512 odd level jumping towards the level of 667, and that was a 667 was a 52-week high, and after that we have seen a profit booking in it. And on the hourly chart or on the shorter term time frame of the chart, we have been seeing a double top formation. Now in today's session, we are seeing stock breaking a shorter term as well as a medium term moving average. They are important. If any closing below a level of 630 would be an indication that further downside can be seen. Now, if we talk about the fresh entry as the risk reward ratio has been considered, then I would be saying that somewhere around 590, 95 around, if it trades, then one can take a long side in it with keeping a strict stop loss of 575 and then play for the target of 635 followed by 660. So right now it's on the sell side rather than on the buy side, but 590, 95 is a band where one can take a long call in it.
Okay, fair point. I understand we've got Shaina Mukaddam joining in as well, independent market expert. Shaina, thanks so much for joining in, and always a pleasure having you on the program. We were talking about life insurance stocks, and we've seen some divergent moves this morning, and we're also trying to understand the implications of the master circular that was sent out yesterday. So I did put out a disclaimer at the start of, we don't really understand what the full implications of this will be, but directionally, seemingly, the surrender values are going to go up, and that is being seen as a negative for the industry because a bulk of their products are those traditional non-linked products. What do you think, at least prima facie, the implications will be, and would you be a buyer in any of these insurance companies?
Yeah, well, this discussion has been going on for some time now regarding the surrender value and when it will actually, at what is the level that, and what is the time frame within which they have to fix and pay, and what is the level they will have to pay. So I think the latest news that has come out is that the surrender value has to be can be paid upfront full in the first year itself. So to that extent, I think it's a negative both in terms of the impact on profitability as well as in the cash flow for the life insurance companies. Having said that, I think there will be some who will be more impacted than the others, especially ones in which, the length of the period in which the life insurance policy holders hold it. So some of the companies that will be impacted more would be something like a Max Life, which is where we are seeing some of the impact come in the prices. Also HDFC Life. Some of the insurers which will be lesser affected, but all are affected at the same time, would be something like a LIC, SBI Life. Basically, here the policy holders are holding it for a longer period of time. So I think to that extent, they are slightly better off than the other ones. But I think it is something that was expected to hit negative sentiment, and that is what has actually happened in terms of the clarity.
Got it. All right. We've started taking questions. This next one is from Neetu. And Neetu is asking about a couple of stocks. You don't have to speak about both, Brijesh. Whichever looks stronger from the perspective of 1 year. And of course, you can say buy both. But it's Vodafone Idea as well as IREDA. Both of these stocks have seen quite an interesting run in 2023. I'm not sure if it's moved too much, IREDA, in the near term, though. If you talk about the 1 year, or rather the year-to-date chart for 2024 for IREDA, What would you suggest that they do from the perspective of 1 year, though? There you go.
So Alex, if I talk about IREDA, first of all, I would be saying the trend is nothing much in it. It's been flat. If I talk about downside, it has a support at 140, whereas on the higher side, it has a resistance at 210. So if it crosses that 210 mark, then we can see a stock, shooting towards the level of 270 and followed by 320. So till the time 210 doesn't breaks on the higher side, I would be saying that it would be trading in the range of say 140 on the downside followed by 210, whereas the idea has been considered is always if I'm not mistaken 2 or 3 days back all the Birla stocks were moving in that idea also moved up sharply from a level of 12 rupees. Now it's been trading at 16.35. So any dip below 15 or nearly around 15 around mark, if it trades, then one can take a buy call on it with keeping a stop loss of 12 rupees and then play for the target of 19 and 20. This I'm talking about 3 month to a 6 month time frame, and if any closing above 20, then we can see a major churning in this stocks and then it can shoot up to the level of 25. So right now below 15 would be the ideal bet in it with the stop loss of 12.
Was trying to get at is that these stocks have moved very sharply and then for a while have not really done too much. But Titagar is the next counter that we're talking about, and we've got Rosemary. This is bought intraday. She's bought at 1,438. Let's pull up where the chart is, and it's a relatively short-term question. So possible target and stop loss for today. Brijesh, quick view.
So Alex, if we talk about Titagar wagon has been considered, all the railway company stocks have moved up very sharply. 1,430 around the stock has been trading right now. Stock, if it doesn't breaks a level of 1,280, then it would be a promising bet for the short term has been considered. So 1,280 would be the stop loss, which I would be updating as for the viewer. As a resistance wise, I would be saying 1,580 would be the first hurdle band. Why? Because previous week high where the supply has come up, so it has to cross that level and then it can move up to the level of 1,780 zone. So ideally for a 1 month to a 2 month time frame, 1,780 would be the target one can look out, and with the stop loss of 1,280.
Okay. I'm actually trying to figure out when you said this, Shaina. One of our viewers has actually shared a conversation, and I'm pulling that up right now. It has to do with Motherson Samvardhana. This is about 2 months back, I believe. And Motherson wiring. So he's actually switched from Samvardhana Motherson to wiring based on something that you had said on that day, but he's asking what he should do from this point. If he's holding wiring, should he continue? Should he add more at this juncture?
Well, he can actually, but he should definitely continue holding. There's a lot happening in the overall group. In fact, even in the parent companies, Motherson Sumi, there also a lot is happening in terms of where they are trying to restructure, raise funds, structure the operations. But still, I think Motherson Sumi looks better even at current levels. He can add at any dip and continue holding his position.
Motherson wiring, right?
Yeah, Motherson wiring.
Looks better. All right. The next question we're talking about is IRFC, and this is from Sri Kishore. He's writing in from Motihari in Bihar. He's bought at levels of 66 and he's got a significant quantity, 7,000 shares. He's wondering what his strategy should be for the next 3 years. The stock is currently at 175. Shaina, should he take some money off the table or should he continue holding or even add more?
I think he should take some money off the table. Because in terms of valuation, of course, it's a government company. So, I mean, if you're going to hold it for the very, very long term, there is no issue. But if you compare it with the rest in the overall peer group, the valuations are extremely expensive. It's more than 3 times price to book 1 year forward. So, I would believe that he would be better off taking some money off the table. He can relook at it after a couple of quarters or maybe a year down.
Okay. All right. So there are more questions that are already in front of me, but we have to slip into a very quick break. We'll be back on the other side to take them, so do stay tuned. Welcome back. You're watching Ask Profit and we're in the midst of taking all of your questions. The next one that I'm taking is from Gautam. He's writing in from Mumbai and he's asking about Texmo Pipes, which he has bought at levels of 79. The stock is currently trading at very close to that mark, in fact. And he's asking what his strategy should be, whether he should hold or sell these stocks, this particular counter. Brijesh, what's the view on the charts?
So Alex, if we talk about on the daily chart time frame, the stock has been trading with a lower tops and lower bottom formation. So that indicates a negative view. That is one point. Second point, the shorter term moving average as well as the medium term moving average. It's somewhere near the range of say 80 around. The stock is trading below that. So that is also giving a negative sign. Even the previous week high that was somewhere around 87 that has been broken. Previous month high was 87 that has been broken. Previous week high is somewhere around 80 rupees, 80 paise or 81 rupees. Been trading below that level. So looking on that front, even the strength of the chart is not that much strong. So a single word would be better to exit this stock rather than holding. It can move further down to the level of say 67, 68 rupees.
All right. Avantel is the next counter that we're talking about. China, do you have a view? We've got a viewer, Sushila, who's bought at levels of, I believe. Okay, let's pull up the chart and see where it's currently trading, just so I get an indicator as to where the stock is currently trading. 140 or thereabouts. I believe she's bought at levels of 113. So she's gaining ground. The stock is also buzzing in trade today, up about 4%. China, what's the view?
See, it's a small cap telecommunications company. So as of now, it looks okay. But though profitability was lower in the last quarter, so it's seen a bit of consolidation, but I think it looks okay at current levels and she can hold it for the medium term.
Let's quickly also get your view on the charts. A quick view, Brijesh, on the charts, how does it look? It's looking strong in trade today.
See, if we look on the daily chart time frame, the stock has been trading with higher bottom formation, which indicates a positivity. I would be only suggesting the as a support, stock should not break 125 odd level. That should be kept as a stop loss. If it holds, then well and very good. Regarding with the resistance wise or the target wise, it has a potential to go 160, 165 in a shorter term time frame. And if I have someone view has a say 3 month or 6 month, then 180 would be the ideal level as a target.
Okay. Relatively short-term question is being asked, but I'm curious what China thinks of Intellect Design Arena. What's the view on this particular counter, China?
Well, actually, the stock has been, sort of not doing, it's consolidating basically, because if you see the actual numbers, they have been slightly disappointing in terms of the last quarter. If we saw last quarter, profits were lower. So I would say it is a stock that one will consolidate for some time and the numbers will improve. They have got good products. R&D is good. So one can continue holding with stop loss.
Okay, fair point. I do want to point out that Manju is asking about IRFC. We've already taken that counter, so I will try and take others. We've got Ramesh Chandra Srivastava who's asking about HLV Limited. Any chance you have a view on this, Shaina? It's a stock that Ramesh bought at levels of 22 and it's currently trading in 26. Any view on this?
Well, it's in the hotel business. It's a small cap actually. So it's done pretty well for itself if you take a little longer period of 3 to 4 years. But in terms of financials, actually, they are improving, but it's a slow, steady performance. Last quarter also, if you saw, numbers were a little bit lower, but the overall sector is doing well. So here again, I will say one can hold, keep a stop loss.
Okay, fair point. HDFC Bank, it's not a stock that we hear about from our viewers, interestingly, on the short-term time frames. But we've got Vishal who's bought 500 shares at levels of 1,488. The stock is currently trading above that, about 100 rupees above that. And the question is for Brijesh, short-term advice. What are the key levels to watch for HDFC Bank?
So I would be suggesting to hold on with the stop loss of 1535 around is a support. So keep that thing as a stop loss. If it doesn't break, then no problem for it. As well as on the higher side, the resistance would be 1605. If we are able to cross that level, then the next level to watch would be 1660 to 1670. I'm talking about very short term time frame, say a week or a couple of week time frame. So first of all, trend is positive. 1535 would be the ideal stop loss and play for the target of 1660 to 1670 odd.
Okay, Manju's got the next question asking for stock-related advice, but has not provided us with a time frame. I would encourage everybody writing in to tell us what your time frame is, whether it's less than a year or more than a year. That will help us direct the question to who might be more appropriate. But the question is on Yes Bank. And Shaina, I'm curious about what you think about this particular bank. There's lots been said, and the ownership is well known. Would you say that somebody can buy for the long term?
Let me say yes, but it's a risky stock. It all depends on what call SBI takes in terms of transfer of its holdings. It holds, of course, the majority stake, along with the government also. So to that extent, it's a risky stock, but I would say one can at least hold if you're holding it. And if you want to buy, I think there are better stocks available which are less risky in the overall banking space. You can even go for the large banks. In the smaller banks also, you have something like a Federal Bank, which I think is safer. But Yes Bank, you can hold if you're holding it.
If you are holding it. All right. Power Grid Corporation of India is the next counter that we're talking about. We've got Saurabh, who's got 500 that he's bought at levels of 319. The stock is currently trading just above that price, so it's not very high. He's not making a lot of money. He's thinking of holding for the next 2 to 3 years. Shaina, a lot has been said in the run-up to the elections about policy, about the requirement for power and all of that. Power Grid, though, some might say that the valuations are a tad bit stretched. Would you also buy into that, and would you hold on for the next 2 to 3 years?
Yeah, valuations are stretched. If you look at the price to book basis, it's more than 3 times, current year, which is actually expensive for a capital intensive industry. At the same time, I think things are looking up for the overall sector. So you can hold, but being a PSU, you can expect reasonable returns. Don't expect it to be a multi-bagger over the next 1 to 3 years.
Okay. Hudco, it's a stock that has been doing quite well based on the expectation for housing and the policy on housing that has been announced by the government, and it's down about 0.33% today. But in the recent past, I do not know if we can pull up the 1-month chart for Hudco, but that should indicate that it's seen considerable amount of buying. There you go, close to 30% in just the last month. We've got a question coming in. Okay, Himanshu Thakur is writing in from Delhi and asking whether it can be bought at the current market price for the next 6 months maximum. Rajesh, what's the view on the charts?
So Alex, I would be saying, first of all, the trend is positive. But buying at this level, I would not be suggesting. Risk reward ratio are not in the favor. See, if we look about a daily chart from 14th of March, the stock had made a low of 151, and from there we have seen stock almost getting double. It made a high of say 300 on 3rd of June, and after that we are seeing consolidation. So ideal level to buy would be somewhere around 250 to 260 odd level with the stop loss of 220 around, and then look for the target of 320 or say 340 odd level in a 6 month or plus time frame. So at this level, I would be avoiding. Let it go and settle around 250, 260, then your risk reward ratio would be in your favor. So just wait and watch. Probabilities are there because since stock had shooted up and it's been the gap has to be filled. So it would be coming down and the gap would be filling up.
Okay. Now, one group of stocks that did quite well in the last week is the Adani group of stocks, and Adani Enterprises specifically. We've got Vrishali from Mumbai who bought at slightly elevated levels in the 3rd of June rally and averaged at a price of 3,320. What she's asking is, what is the likelihood of it reclaiming the 3,600 mark quickly, and what the outlook on the stock is? Shaina, what would you suggest that she do? Should she hold on, and what advice can you give her?
Well, it does look like if you're holding for the medium term 6 months, the stock will give you a better rally because I think most of the group companies are doing better. So to that extent, one can hold. You can keep a stop loss. I would suggest you can keep a stop loss of somewhere close to about 3,000. Okay.
Just a quick standard disclaimer, as we normally do. This is NDTV Profit, part of the NDTV Group, and it is owned by the Adani Group. That brings us to the end of this particular edition of Ask Profit. Shaina as well as Brijesh, thank you so much for joining in and for answering all of the questions that you did answer. And viewers, we try to accommodate as many of your questions as possible. Understandably, we cannot take all of them, but hopefully the ones that we've discussed today, the stocks, have benefited you in some way as well. That brings us to the end of this program. Thanks so much for watching. This is NDTV Profit. Hi, thanks so much for joining in. You're watching NDTV Profit, and this is a special broadcast to help you understand a few of the changes in the rules that govern life insurance. My name is Mathew, and with me is Harsh Saita, and we'll try over the next 15 minutes or so to help you understand the most important changes that are being suggested by the insurance regulator, that is the IRDAI. This is in the form of a master circular that came out last evening, and as we speak, our teams and both of us have been looking at the fine print to help you understand. We're joined right now by Kshitij Mahajan of Complete Circle Wealth and Vivek Jain, Head of Investments at PolicyBazaar.com. And as I understand it, gentlemen, both of you have also been looking at the fine print to try and understand the implications. And we're still, as a disclaimer, trying to identify the full implications of this, but hopefully we can give some direction to the policyholder, to the investor, to the viewer right now. So to that end, let me first come to you, Vivek, on what you think the most important changes are that are being suggested. From our perspective, it seems to be the change that is suggested in the surrender value.
Yeah, thank you, Alex. I think, there is a major change that is coming up in terms of the surrender value on the non-par and the participating products in insurance. And I think it's a very, very pro-customer move because now in the new circular, as the understanding that we have from now on, right now, that from the first year itself, the policies will start acquiring a surrender value, which will be basis discounting on the GSEC rate plus minus 0.5%. So actually the discounting rate has also got defined, and the surrender value will start having effect right after the first year. Earlier, this was after the second year onwards.
Harsh also joining in. Want to quickly try and understand. So the existing terms of an existing policy, they stand corrected to the current surrender, the revised surrender value regulations which have just come out. Is that how it works? Vivek?
Sorry?
So Vivek, just trying to break this down a little bit more. What happens to the existing terms in terms of surrender value? So say we have a policy holder who already holds a particular policy, has certain terms with regard to surrender value. Now, say this policy was taken 7 or 8 months back. Is he now entitled with immediate effect to be able to surrender his policy basis the revised surrender value regulations? Is that how one can read it?
So as for the current understanding, all the products will have to be refiled with the regulator, and new products will have the new surrender value regulations.
Okay, I think
this is the current understanding that we have.
Okay, because the new
I don't think it will have an impact on the existing policies.
Understood. Because the new regulations come into force on the 1st of October, is that right?
Yes, that's the understanding that we have currently.
So just to simplify this completely, all policies that are issued on the 1st of October and after this should have the new regulations. Is that right?
Yes, that's that.
Okay, fine. Kshitij, I'm coming to you. Initial thoughts on the change. Directionally, seemingly, it's a positive. What do you think about this from the perspective of the policyholder?
Well, good afternoon, Alex. And I think it's a very, very welcome move with regard to mis-selling, with regard